focus. Ideate, innovate, enable.
Hello and welcome to Decoding Business Growth. I'm Sumaira Abdi. This week we take a close look at a fundamentally strong company that's based out of Chennai. It's Cholamandalam Investment and Finance. This company is part of the multifarious Murugappa Group, which is now into its fourth generation. Over the last 3 decades, Cholamandalam has managed to carve out a strong niche for itself, both in the vehicle finance space as well as the home loan segment, to emerge as a leading NBFC player with a pan-India presence. But what sets Cholamandalam apart is that it's not out to bankroll people. It's being selective in its own way. Let me explain. The management of the company, what they have done is pick a niche in the vehicle and the home loan segments where the banks have not been able to penetrate for various reasons. And it is this focus strategy that has paid off big time. Its top line and bottom line have been growing at a strong clip year after year. So here's a look at the Cholamandalam story.
Yeah, we've met, remember? Now do you remember? Chola from Murugappa? Yes. My one truck, now 3. Thanks Chola Finance. My life changes.
In a sense, the general public was not aware that the 115-year-old Murugappa Group has over 28 businesses, including 11 listed companies. So with a view to create awareness about how the group was touching the common man's lives every day without them actually realizing it, the Murugappa Group unveiled a high-decibel TV campaign in 2012. And that ad campaign, Bet We Have Met, had the desired impact. As the ad depicts, Cholamandalam Investment and Finance is part of the prestigious Murugappa Group that provides vehicle finance, home loans, SME loans, investment advisory and stockbroking services through a network of 534 branches and 32,000 employees across the country. Currently, it has over 25,000 crore rupee assets under management, of which 70% constitute vehicle financing and 30% constitute home loans. So how did it all begin? The promoters hail from Chettiar community, who traditionally are into financial services business. So it was not surprising that M.A. Alagappan did likewise in 1978 by setting up Cholamandalam as an equipment financing company. But there was an issue over tax interpretation of equipment leasing, and this saw the management shift its entire focus to vehicle finance in 1993-94. There were no regrets. Today, Chola finances all kinds of vehicles. It apportions 26% to light commercial vehicles, 13% to heavy commercial vehicles, 15% to cars and multi-utility vehicles, 10% to tractors, 8% to 2- and 3-wheelers, and 15% to refinance and pre-owned vehicles, and the balance to residual businesses.
In 1978, actually, we started off in the equipment financing business, plant and machinery, and basically we used to lease plant and machinery. Then after a while, leasing actually became unviable as a business from a tax perspective. So we began to look at different opportunities to grow. One was hypothecation of plant and machinery in itself, and then soon that gave way to getting into the trucking business, or basically beginning to finance what we started off as cars and MUVs to start with, and then trucks over time. Currently at Chola, we finance both second-hand trucks and new trucks. Our current business mix is about 70% new and 30% used. And we find both to be good businesses to be in. We do trucks that are just come off straight off a lease, which we refinance, and we do older trucks that are 6+ years old. Our primary business, though, still continues to be new trucks, where we go across the spectrum from mini lights to heavy commercial vehicles.
Even as the business was growing, the management went that extra mile to stoke the spirit of entrepreneurship among truck drivers. Thus, many drivers became fleet owners thanks to funding by Chola. It is this value creation, coupled with financing new and pre-owned vehicles, that has helped Cholamandalam become a leading NBFC player in India. Sample this. The number of vehicles funded by Chola has grown from 69,814 units in FY 2010 to 2,04,354 units in FY 2015. The company, which has over 7.5 lakh customers, is adding 15,000 newer ones every month. It is betting big on this segment as nearly 70% or 17,638 crore rupees of its total assets under management are deployed into vehicle financing. To insulate its business further, Chola entered the home loan segment in 2006, and this yielded rich dividends for the company. In the first year, it disbursed 318 crore rupees. Today, this segment constitutes nearly 30% or 7,280 crore rupees of its total assets under management. To keep customers delighted, Chola entered newer and newer arenas like mutual funds, gold loans and consumer finance. But not all forays proved lucrative, so it exited its consumer finance joint venture with DBS Bank of Singapore. In all this, the management has not taken its eye off the main line of its business. Today, Chola has emerged as a primary financial services provider in the rural and semi-urban pockets, as 70% of Cholamandalam's 534 branches are located in rural areas. 20% have a semi-urban focus, while 10% are urban-centric.
There is a bit of a saturation on the urban market, in the sense because urban market borrowers are more credit savvy. Right now their needs are being satisfied by banks and other financiers who are able to give loans at much finer rates. Hence the urban market customers will get saturated over a period of time. For the segments we are working on, but we will always keep finding newer segments to work on. Like today we are working on SME loans in urban markets, which are for customers who do not get credit from banks. So there are certain segments in the urban market which we will continue to work on, and the rural market from a vehicle finance perspective is booming, with the better roads being built into the interiors and availability of smaller and better transport facilities being able to reach out into the hinterland. The demand for vehicle finance in the rural markets will continue to grow, and we will keep leveraging that demand.
Unlike other NBFCs, Chola has concentrated on certain segments for its business. For instance, 2/3 of its vehicle finance portfolio comprises small fleet operators, and in the case of home loans, the entire portfolio is self-employed individuals. Both these markets have the typical characteristics of low ticket size, cash transactions, limited credit history, and volatile cash flows, which makes it difficult for banks to address.
We actually engage the customer far ahead of when banks usually do. I often joke that no business happens in our branches. That's because all of our business happens in the field, right? Basically, all of our field forces that sit in the branches are out every day, engaging with customers, talking about what their needs are, and getting in front of those customers and showing them that we really want to service them in a way that is much more proactive than banks usually do, is what gives us that edge. And another reason is that basically over time we've been able to develop much stronger relationships with the channels. So if you think of dealerships, car dealerships, they know that NBFCs want to work much harder to get their business. And as a result, right, we've always enjoyed a strong relationship with them, and they support us in our growth. A similar situation exists in home equity as well, where we've developed very strong relationships both with the channel and with end customers that basically keeps them coming back.
Besides the smart segmentation thrust, it has also invested heavily in technology, and this strategy has worked well for the company. Its net interest income has shot up from 529 crore rupees in FY 2008 to 3,253 crore rupees in FY 2015, registering a CAGR of 30%. Profits during the same period grew from 59 crore rupees to 435 crore rupees, recording a CAGR of 33%. It has managed to maintain net interest margins in the range of 7% to 8.8% between FY 2008 to FY 2015. On that note, it's time for a short break. When we come back, CNBC TV 18's Sumaira Abdi talks to Ajay Saraf of ICICI Securities to decode Cholamandalam's success story. Stay tuned. Welcome back. The shareholders of Cholamandalam have every reason to be happy. Not only as stock prices almost doubled in the last 1 year, but they have received consistent dividends from the company. Sumaira Abdi caught up with Ajay Saraf of ICICI Securities to get a markets expert on Chola.
So this time around, Cholamandalam Investment, this is a space, the NBFC space, which has a lot of successful companies. So what is it that made you choose Cholamandalam Investment? What is it that, stands out about the company?
Cholamandalam Finance, as you know, pedigree, is part of the Murugappa Group, rupees 243 billion conglomerate with 28 businesses and 9 listed entities. So that kind of makes it, a part of the pedigree is obviously stands out. They're a very strong management team led by its MD, Mr. Subbiah. It's delivered consistent growth and profitability across all critical financial parameters. And it has a diversified business mix over the CV business and the mortgage business.
One of the things you said that it's the pedigree that stood out for you, right? So it's a family-run business.
Right.
Do you think that is what has worked in their favor? I mean, how would you rate their management style vis-a-vis, something which would be a professionally run company?
Right. I wouldn't say it's a family-run business. It's headed by, I said, Mr. Subbiah, who's from the family, but he's been the key to transform Cholamandalam Finance over the last few years. Although the businesses themselves are run by very capable professionals. And also, if you see, it's, the company has invested quite a lot to be a technology-driven company. And it runs its businesses through over 500 branches, which it has set up across India. So I would think, it has a right mix of the family and the professional setup.
As an investment banker now, what do you think of the kind of stock market returns? They've been giving dividends consistently. This is a stock that has doubled in the last 1 year. Sure. How would you rate their performance in the market?
They've done extremely well. If you look at it, as you said, doubled there, so the shareholders are extremely happy. And what it does is that if they have to go back to the market for the growth, so capital won't be a constraint because they've delivered that, a good set of numbers, a diversified set of businesses, a good management. So I think overall it has done pretty well for the market.
So, this is a company, they've been adding businesses. They've also chosen to exit a few businesses. So would you say this nimble-footedness has sort of worked in their favor? Do you think this is an advantage that they have, that they're not really emotional about their business?
Absolutely. They have been extremely nimble-footed and then they've been quick to react to the market realities. If you look at it, they exited the personal loan business and they scaled down their small business loan and they focused on the more secured CV and the mortgage businesses, which they have grown through the technology-driven initiatives. And that's a pretty, which is very good for them. So, and then also they're part of a very reputed Murugappa Group, right? They are kind of focused on the businesses they are in, but they're also focused on the bottom line, and which has driven the transformation in Cholamandalam Finance.
Another thing I wanted to talk about is the kind of geographical focus that they have, which is mostly in the rural or the semi-urban areas. Now with a lot more companies entering this space, do you think they'll be able to defend their turf and even manage some growth?
The company has set up this 500 odd branches that have grown well under that. They've also differentiated themselves through some unique initiatives, which has worked well for them. And they've earned trust over the years. And they are part of, as I said, Murugappa Group, so a very strong brand. With all these, I don't see why they can't hold on their own against competition and move ahead.
All right, time now for their SWOT analysis. So what do you think would be their key challenges going ahead? As well, what will be the growth drivers that will take them into the next leg of growth?
They have grown extremely well over the last few years, and so the key would be to maintain the asset quality. So they have delivered, consistent growth in both in the book and also on the profitability, and they need to maintain that. Also, what has happened is they've rationalized a lot of branches last 2 years, and fruits of that would be, seen in the coming months. So that's very important, and they're also well capitalized. You will see its capital adequacy is pretty good. They have a very great set of investors, and they have been able to raise money at regular interval. The promoter holding is comfortable, so dilution is not an issue. And they have given consistent return to shareholders over the last few years. So going back to capital market again is not an issue. So in short, they have all the levers to deliver consistent growth in the coming years.
All right, Mr. Saraf, thanks so much for being with us.
Well, that was Ajay Saraf's take on Chola. On that note, it's time for another short break. When we come back, we look at the road ahead for the company. Stay tuned. Welcome back. The management's nimble-footedness is reflected in its strong financials, and this has made it a darling among private equity players like Norwest Venture Partners, Amansa Capital, IFC, Creador, Aquarius Investment Advisors, and Apex Partners. These players collectively hold 21.45% stake in Chola. Sumaira Abdi caught up with Shashank Singh of Apex Partners India to understand why they invested in Cholamandalam.
Shashank Singh from Apex Partners India now joins in. Mr. Singh, thanks very much for speaking with us. First up, what is it that prompted this interest in Cholamandalam Investment Finance from your side? What made you invest in this company?
So we were spending a lot of time looking at the financial services space in India as a potential investment destination. And we identified NBFCs as an area that we wanted to focus on. And within NBFCs, we looked at specific companies that had developed strong niches and defensible market positions in those niches. And Chola was one of those companies that we identified. And the more work we did into this space and into the company specifically, the more we liked. So Chola specifically has a very strong position in commercial vehicle finance, lights and small commercial vehicles, and an emerging business in home equity. And when we did research into the group, the Murugappa group, which is an extremely well-known group in India and very well respected, we decided that this was a group that we wanted to partner with, specifically for their culture of transparency, high corporate governance and integrity.
You know, Cholamandalam Investment has now become a force to reckon with. What would you attribute its success to?
Chola combines two attributes that we found extremely attractive. The first was the fact that it has grown quite remarkably over the last 4 to 5 years prior to our investment. In fact, net income grew from about $10 million in 2010 to about $60 to $65 million last year, with very fast growth of the loan book and assets under management, which was fantastic. But equally, they did this and they grew very rapidly while maintaining very strong credit quality. And in fact, this piece has come through very strongly in the last year, as they've managed to maintain a focus on collections and on containing credit costs while some of their competitor group has stumbled.
Okay, so if you were to do a peer comparison, where do you think Cholamandalam would stand?
As I mentioned, the market, as we all know, the macroeconomy has been slow, industrial production has been slow, and so in this environment, what separates the strong performers from the average performers has been the ability to really focus on collections and on credit costs. And this has been our experience over the last year that we've invested, that Chola has maintained this focus very strongly and has therefore demonstrated good performance to the market.
You know, this is a company that has been consistently paying dividends. Their stock has been on a roll. On the ROI parameters, this company has more than fulfilled their obligations. Do you think this is the kind of run rate that they can sustain?
As I said, there's a good focus on collections and credit costs. And this is something that we laud. I think as the macroeconomic growth comes back, the focus will shift back towards growth of loan book in this segment, and so we are hopeful of continued strong growth in the company.
All right then, so would you look at investing more money into the company?
absolutely, if we get the opportunity to, we would love to.
Mr. Singh, thank you so much. Pleasure speaking with you.
To reduce delinquency rate and operations costs, the management has invested heavily in technology. It has roped in Cognizant to digitally transform its vehicle finance business, starting from loan origination to recoveries, reducing operations cost to improving business agility and customer experiences. These are the areas Cognizant is focusing on.
Investing in technology and ensuring that we basically have the most cutting-edge technology in the business, I think, is a base requirement for competition. As a matter of fact, the companies that do it well basically are going to be the ones that win in the future. And so for us, investing in technology is something that we see as extremely important. We'll continue to do and have done over the past 5 years. I constantly, push both the team and myself on that front. I don't think we're doing enough. I don't think we're innovating enough as a company. But unless we start doing this more and more, I do think that long-term survival for all of us is at risk. So my dream for Chola is basically to make Chola into one of the top 5 financial institutions in the country. I do believe that it is a dream that we can definitely achieve. We have to look at a realistic time frame for it. But I do think the opportunity for financial services in India is extremely big. And given Chola and where we're headed, I definitely think there's an opportunity for us to be one of the top 5 financial services players in this country over time.
Cholamandalam is all set to move on to the next level as the commercial vehicle segment is on the cusp of revival. It has also recently applied for the payment bank license and ventured into SME loans. With the Indian economy slated to grow at a faster clip, the management's dream of becoming one of the top 5 players seems easily attainable.
Well, the management have set their targets pretty high. They want to become one of the top 5 institutions in the country. Not an impossible task if one looks at the way the management is investing in technology to improve their overall efficiency so as to keep delighting their shareholders. The management does seem very committed. So on that note, it's time to say goodbye. We'll see you again next week with another interesting story. Till then, keep watching CNBC TV 18.